Hi everyone, welcome to the latest and greatest edition of the ABCs of VSA. My name is Lauren Snedeker and today is Wednesday, January 11th. Happy New Year to all of you. I know we had a couple weeks off from the ABCs and I hope all of you are a little fatter and a little more rested. I know I am. I ate very, very well when I was home in Boston, and then I spent New Year's in South Carolina, and it was really great to have bare feet on New Year's Day. 70 degrees. So before we start, just want to give you all a warm welcome and just wanted to see who was new. If you could type N for new, I'd love to see who is new to the program. Great. Welcome, Lois. Welcome, Bob. Hi, Matt. Hi, David. Hi, Alan. Good to see all you guys. The ABCs of VSA is a little bit different than some of the other webinars we do both in our private VSA club, and it's a little bit different than Gavin. I talk a little slower. The goal of the ABCs of VSA is to take small concepts, break it down, and give you a good concept or comprehension or understanding of what we're looking at. Oftentimes I don't fly through charts and move really quickly. I take each piece so that way people can take it or leave it and go back to it at a later time. The PowerPoint slides that go with this presentation are always available to you. You simply need to email me, lauren@tradeguider.com, or just check your chat box. I put that right in there for you. I find that the PowerPoint slides allow you to see and learn at the same time. One of the hard things about webinars is you're not in a classroom. Yes, it's great, technology is great, and here we are all over the world being able to teach each other wonderful new things. However, you might be home eating dinner right now and half paying attention, or someone's bothering you, you may not have the full attention. What the PowerPoint slides can do is to minimize some of that anxiety about missing something I might have said. Also, knowing that this is being recorded and knowing that you can also get these slides afterwards hopefully can allow you to relax a little bit. And if you miss a couple things or if you have a few questions, hopefully they'll get answered by the end, or you can always reach out to me. So that's kind of the format of the ABCs of VSA. What we're talking about today is using failed signals to confirm. Sounds a little bit strange, but we have signals for signs of strength, and we have signals for signs of weakness. And sometimes those signs of weakness can actually confirm strength, and sometimes failed signs of strength can actually confirm weakness. And I'm going to show you that. This particular presentation was a direct result of a conversation I had with a customer last week, and we had a very good discourse about analyzing the chart, and it made me realize that I had done this once before back in November, end of October, and I thought maybe it might be good to show you some new charts and to show it to you again. So we will begin. Okay, so today's objectives are to confirm the signals that you're reading, to determine if they're successful or not, and to evaluate the whole picture with the information you now have. In other words, you only can evaluate what you have so far. So if you're at the far right of the screen, and each bar comes in, you only can evaluate what you have behind you. But if you analyze only one signal at a time, you miss the whole thing. So we want to look at the part and move up to the whole, and look at the whole and move down to the part. So here we have the overall picture. So I'm asking the question, what is the overall picture? And just in case you can't see, this is the Apple chart, this is the daily chart. What we have here, first of all, is the medium trending. So overall, you're in an uptrend here, which is why it's blue. Here, you're in a downtrend, which is why it's red. Again, you have the blue. You have this overall downtrend. And then you have this little area that's an uptrend, and I'm focusing on that because we're going to talk about that. And then over the last month, you've had an uptrend clear in place. What you see here are green signs of strength. Here, all these green triangles, they're indicators. They're proprietary to VSA. You also have signs of weakness that are red here, okay? And so what you typically are looking for is you're looking for campaigns such as here where the smart money is trying to sell off into higher prices. It makes sense. If you're the professional money, then you're going to sell high and buy low. A very active period here with high volume tells you that they're buying down in this area. A very active period here tells you that they're selling in this area. We look for areas, we look for indicators to tell us what's happening, and then we follow after them. We try not to get ahead of them because you can get caught sometimes in their maneuvers. So what we want to make sure that we do is that we actually follow along and recognize the signs and know what to do. The area that I'm focusing on today is this area right here. And the reason why is because you have this period of falling prices, this overall downtrend. The price starts to come up and you get these signs of weakness. So that in and of itself tells you, okay, we're looking for signs the market's going to go down. What I want to show you is that these signals are actually failures, and what they're really doing is confirming the overall strength of the market, and they end up proving that the market is going to continue to go up. So we're going to be focusing on here. What I always like to start with, though, is the basics. So we're going to start with this area and analyze this bit by bit. Then we're going to focus on this to try and show you why it's failed, to then help you understand why you could predict that the price would go up. Okay? If you can't see my screen, you need to check your own settings. Everyone else seems to be able to see the screen. So a couple of you that are saying that you're not able to, you just want to make sure that your settings are correct. So just check your audio and your visual. Worst case scenario, exit and come back in, or refresh your screen and you might be okay. Okay. So again, we're going to start with this analysis here and show you how this is the accumulation phase. And then I'm going to show you how this area is actually a failed weakness or a confirmed strength. Sounds counterintuitive, but I'll try and show you bit by bit that it's not. Okay, again, this is the Apple stock. For those of you that might have missed that, this is the daily. And the nice thing about any charting software, whether it's RT or something else, is you can go back as far as you need to in order to see an overall picture. If you're not sure, just go back. That's what I do. That's what everyone does. Okay, so always feel comfortable. This is about 90 or 100 bars. Okay, so again, like I was saying, what we did is we're just focusing on this area right here, not to get nervous, and then we're going to analyze this area. Okay, so in this area here, I've marked sign of strength A, sign of strength B, sign of strength C, and then I marked the volume here on D and the volume here on E. The accumulation phase is a period of buying by the smart money. According to VSA methodology, according to Wyckoff, we have two phases. We have the distribution or selling phase, and we have the accumulation or buying phase. This is a period of buying by the smart money. It's marked by widespread down bars. Okay, here's a nice wide spread or range. It's a down bar, meaning that the close here has closed lower than the bar behind it. Ultra-high volume bars, such as you see here. And you can tell it's ultra-high volume two ways. If you click on it, it'll tell you. You also can see that it's much higher than its neighbors. And this little blue line is the average volume line, and it's much higher than the average volume. So you can see it both with your eyeballs, and you can let the computer tell you as well. Stopping volume, selling climax, or a shakeout are all indicators that can help you to alert you that you're at the start of an accumulation phase. So here's some bar by bar identification. Bar A is a test. What that means is they're testing for supply in the market. They're testing to see how much supply is left before they're ready to bring the price up. What you'll notice, if you can tell, that you're in a white diamond area, which means that you're not in a confirmed trend. You're in a sideways moving market, or you're possibly in a trend reversal. This test in and of itself is not strong enough. What it means is that you need to wait. Bar B is potential stopping volume. What I mean by that is that when we click on it, it actually tells us that the name of the indicator is potential stopping volume. And I'm going to explain that in much greater detail, so please don't worry. And we're going to explain how that is exceptionally important and marks the start of this accumulation phase. Again, this is the name of the indicator. Bar B is a very wide spread. It's a down bar because it closes lower than the bar behind it. And we also have an ultra-high volume bar here on D. Bar C, the indicator here, is a test after a shakeout. Again, I'll explain that to you. And bar E, I marked it so you understand that it's high volume. Again, you can see with your eyeball that it's higher than some of its neighbors. It's right above that average line, and if we clicked on it on our computer, it would tell us that it's high volume. Okay? This again is just the bar by bar identification. I'm now going to go into detail about each one. So bar B is potential stopping volume. That's the name of the indicator that's proprietary to VSA or Trade Guider. Okay? Again, it's a widespread down bar, and if we weren't sure, we could tell by our eyeballs. We could also click on it, and it would tell us that it was widespread. Jordan asks a question about bar A. I explained just briefly that bar A is a test bar. It's here in the background for us. We're at a sideways moving market. Bar A is confirmed because the next bar closes up. However, you're not in an uptrend. So this tells you that you're testing the supply in the market, but you're not yet ready to move the price up. Okay? So it's not a failure yet. What you're looking for is something clear to tell you that you've started a phase. Okay? So bar A by itself really doesn't have a lot of weight. You need to wait, and it'll tell you in the future, look for further testing. And this is what we're looking for. So bar B really tells us that we're actually at the start of an accumulation phase. It often is marked down on bad news. And I went and I checked on November 10th, 2011, and the bad news was rumors that the iPad was cutting production in Asia. People panicked. Another reason that I read in an article was that the Kindle Fire was coming out. It was going to also bring a lot more competition for the holiday season to the iPad. And what this means is that oftentimes with this high spread volume, that means as people start to panic, the smart money steps in and they'll start to buy this selling off. When it closes down near the low, it means that they have absorbed much of the supply. So the demand for lower prices has overcome the supply that's available in the market, and this is why you have a low close. You have a wide spread because there's a lot of buying and selling in this bar, but you have ultra high volume, which means the smart money has played a major role in that. The nice thing about the indicator when you click on it is the dialog box will help explain that for you as well. So the ultra high volume, again, the smart money is buying as the herd is selling, and it adds to the orders and thus the volume. So as each order comes in, as each selling order comes in over and over again, it contributes to this ultra high volume. In this particular case, this potential stopping volume is the name of the indicator. It's triggered by an algorithm depending on the spread or range of the bar, where it closes, its volume, and relative to the bars around it. Sometimes you can start the accumulation phase with something called potential stopping volume or selling climax. Climactic action is another one. You want to just read what the bar says. Sometimes a shakeout is also one. And you just want to read what the bar says and look at a period around you, and you can tell that it's a start of a downward trend. Okay? So in this case, it's the potential stopping volume. Okay? You cannot assume that the smart money is selling because the smart money is not panicking. The smart money is actually manipulating the panic in the news that the iPad is failing. That's precisely what VSA is based on. It's based on the fact that the market is manipulated. It's based on that premise, and that the majority of volume is the smart money or syndicated professional traders that trade professionally in the market with billions of dollars to move the market. And what happens is in a period of falling prices, you have people that get nervous and they sell. And the person they sell it to is the professionals because they want to buy low and they want to sell high. This is one of the areas that is marked the accumulation or buying phase. This is how we can tell. And as I was saying, when the close is low, you can tell that demand for lower prices, demand for this product has overcome supply in the market. Supply is basically what the herd has left to sell. So the herd has sold a lot in this down bar. They've sold a lot, and the smart money has stepped in and bought it. And they've absorbed most of it. If they hadn't, it would have closed in the middle. Okay, so we have a widespread down bar, we have the bad news about the iPad, and we have ultra high volume. Okay. Now, there's a down move behind you. Again, this is all in the indicator in the dialog box. As you scroll through the dialog box, you can see this. I'm just breaking it out for you to kind of understand the methodology behind it and help you think like the smart money. So there's a check mark here. There's a down move behind you. Yes, I have a down move behind me. The next bar should be up to confirm. So I don't have a confirmation, so I put a red X, okay? You can tell that the next bar is not up because the close of this bar is slightly lower. However, what I will tell you is that if you notice here, there's still a lot of volume. That means there's still more sellers. So maybe on that first day, if the herd was holding their instrument and they noticed that the stock had gone down, maybe they were waiting to see what would happen the next day, and then they started to sell. So sometimes this period of accumulation can happen over 2 bars, okay? Steve asks, what if the next bar is equal? Then you would actually ignore it. You could neither confirm nor fail it. So I would just say wait. And what I would also do is, again, look at the volume here. If the volume had completely dried up, then that would mean that the supply has dried up. So if we consider the volume here, how much supply is left in the market to sell off to the professional money, then we can interpret that over these 2 bars, the selling has been done by the herd and that the smart money has stepped in. And again, if you notice that the close is somewhere to the middle to the low, that means that the smart money has been overcoming the supply. Okay? But again, because the next bar after this one was down, even though it was slight, it was not up to confirm, it means that the market is not going to rally until the supply has dried up. So it's a little bit of a waiting period. We also know that the start of an accumulation phase takes time. They're not going to buy it all at the moment and then shoot it back up. So we're going to look for a test back into this area on lower volume. Now, one of the things that RT has, TradeGuider has, and it has in both its standalone platform and in its plugins, it has this pinky purple color bar. And that represents volume lower than the previous 2. And that's important for you to notice, okay? And that's what you look for when you're trying to figure out when a phase has ended and when a trend is about to change, or when the smart money, in this case, has absorbed all the supply and is ready to move the market back up. Okay, so again, the potential stopping volume is here in this bar. It's the start of the accumulation phase because we have a very widespread bar, an ultra-high volume. We have a low close, which means that the smart money has overcome supply. So the demand for these falling prices is done by the smart money. Because the next bar is not up to confirm, that means we're still in a waiting period. There could be still a little bit more movement, and we need to wait. One of the hardest things about traders is that they're impatient. They like instant gratification. And now that computers and technology with trading has increased exponentially, it becomes even harder to wait. How many of you would agree that it's hard to wait? Type yes if sometimes you really want to just trade what you want to see versus what's really there. And we all do it because we're waiting and waiting and waiting. And some of us have more than one thing that we're using. And so as soon as we see something, we go, yes, 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 yes. Sophia, thank you very much for your honesty. That's your #1 difficulty. Yes, absolutely. And Scott says, yes, the setups take a long time, and I would agree with you. And if you look at this, this is a daily chart. So what we're actually showing you is we're now 2 months ago. right? So this was November 10th that we're looking at the moment, even back here on November 4th. So keep that in mind. We're now at January 11th, right? So, okay, so we're going to move on to bar C, and we're going to try and put it all together. And thanks everyone for your honesty. I appreciate that because we're all kind of in the same boat. Okay, bar C is called test after a shakeout. Okay, and the check marks mean this is what we have. Yes, we have a down bar. Again, a down bar means that this close is lower than the close of the bar behind it. If you notice, there's a teeny bit of a gap here. Okay, we have strength in the background. What we mean by background in VSA, a lot of people ask this, is what's to the left, what's behind you. Okay, so what you want to do is take a look at the indicator and scroll through the whole thing, okay? So I went back to October 4th, and that was where we saw a shakeout. I then looked at the news, and I discovered that on October 4th, 2011, iPhone failed to release its version 5. What they did is they did a bait and switch like the mattress companies do, and they tell you that you can buy a mattress and a box spring for 50% off, and then you walk in and you realize that it's not actually a beauty rest or a Sealy. It's actually kind of their crappy one that they got off the back market. So this is what a lot of people felt that iPhone did. They kept promising the iPhone 5, and what they did is they came out with the iPhone 4S, like, hey, here's the iPhone 4, and it's great. Well, really, all they meant was it's the iPhone 4, and now it's available on Sprint. And so people really felt that that was kind of a bait and switch. And so that was actually a direct impact on why there was a shakeout on October 4th. And again, I'm just going to go back for 1 second just to show you. Here's October 4th, okay? Very, very, very ultra high volume on this bar, higher than all its neighbors around you, and this was the shakeout. And anytime you see something like this, just simply go into Google, put it in your little search, and I put Apple stock October 4th, 2011. And what I found was that this is what happened, and usually shakeouts often happen on news like this. So when we go back to bar C, let me just go back there, so we're back here again. When we go back to bar C, the test after a shakeout refers to that shakeout all the way back there. You also know that you're now in a clear downtrend in place. You've also had this potential stopping volume here, which means that the smart money is starting to buy these falling prices. And what they're trying to do is they're trying to basically buy as much as they can at this lower price before they're ready to move up. So we are looking for tests for supply in the market. Okay? What you'll notice here, bar E, and the reason why I marked it, is that there's quite a lot of volume there. So what you can infer by that, and what you could read in the dialog box when you scroll through, is that there's going to be a little bit more period before you're ready to go up because there's still a lot of volume, meaning that there's still a lot of supply left. Apple is a very strong stock, and a lot of people aren't simply going to panic over one thing that happens, and so they're going to wait. Not everyone falls into this trap, especially with a strong market like Apple, a strong product like Apple. So when we read this, we see, okay, yeah, I have a down bar. I have strength in the background, meaning to my left, bar B, strength in the background. I'm retesting the shakeout on October 4th, right? And like I said, the bad news was that there was no iPhone 5. Now the next bar should be up, which I put a check mark because that's true. The next bar is up, and we expect higher prices. And so now we've kind of confirmed that we're in an accumulation phase. And so as we move forward in this accumulation phase, we are now looking for the last part for the volume to drop off, for the supply to go away, for them to be ready to actually bring it back up again. Okay, so again, here was the area that we were just analyzing. And what I did is I took two lines. I took the bottommost line, and if you clicked on this bar, what I did is I drew a horizontal line on the close, and I drew a horizontal line on the very low of the bar. Okay? So this is the accumulation phase, or what we call the Wyckoff Creek. This whole area between the top of this and the bottom of this whole area is the creek. And this is an area where you expect it to sort of go up and down and grind, and what you're looking for is confirmation that the volume has gone away. Again, pink means that the volume is lower than the previous two. And you're looking for it to then go back again. And Kim is right, jump across the creek, which is why we're going to show you in a minute what happens. So again, what we did just a minute ago is we identified an accumulation phase, okay? Bar B is the start of our accumulation phase. Notice the ultra-high volume. What I did is I drew two horizontal lines at the bottom, at the low of the bar, and I drew it at the close of the bar, okay? And it's very easy to do. Every single trading platform will allow you to draw a line. So again, we were just talking about bar C. The next bar closed up, okay? But notice the volume. It's a little too high. I would expect it to be retested. And what do you know? It goes up, it goes down, and it goes down again. Now this is very curious. Much lower volume than what we've seen over the last 10 bars. Also, it tries to go up, it closes on the low, and it closes lower than this, all right? What I'm looking for now is for it to go back into this area and test it one more time for the volume to go away. I'm looking for one more test to prove that I'm on my way up. A test in a rising market, a no supply in a rising market are both very good. Okay? So here we have this period right here. And what you notice is you have 1, 2, and then signs of weakness, and then you have a sign of strength, and then you have another sign of weakness, another sign of weakness. And then notice it comes down, and you have one more sign of weakness, and then it goes straight up. So what we're going to show you in a second is that these signs have actually failed. And what we're doing is we're actually confirming the strength, meaning we're confirming what we've seen here, that the price is going to ultimately move up. It's always a question of when, which is what we're trying to analyze. Okay? So bar A and bar C, just so you know, bar A and bar C are up thrust, and bar B and bar D are no demands. Okay, and I just put a 1 since it's a green. I figured not to let you get confused. Bar 1 is a no supply. Again, what I'm going to do is show you each bar, explain them, and then explain why it's failed and how these weaknesses actually confirm strength. This is sort of the subtlety or nuance that you need to look at because you need to confirm the signal or determine if it's failed. Now, bar A, again, is an upthrust. A true upthrust has weakness in the background. Okay? We don't have weakness in the background. We have that period of accumulation, which is strength in the background. Again, with strength in the background, it is likely to be tested or it is a false upthrust. That's exactly what it says in the dialog box as you scroll down. So this is what I'm looking at. Even if I was just here, even if I don't have anything else, if you're on the far right side of the screen, this appears. Okay? Okay? Bar B, it's a no demand, and it fails. It says in the dialog box we need to study the background carefully. With strength in the background, which we have, the indicator alone carries less significance. This is true. Literally, as you're reading, strength is in the background. Okay, so this is a weaker signal. The next bar should be up to confirm. But the problem is the next bar is down. In an uptrend, it may lead to a pause or a small decline back down to support at best. So essentially what we have is one sign of strength, one sign of weakness in bar A, except we have strength in the background. And then we have a no demand, but it fails. And it's telling us that if we're in an uptrend, which our medium-term trending is telling us we are, then it may lead to a pause or a small decline back down to support at best. And what do you know? If we use bar B as our support, that's exactly what it's going to do. It's going to go back down to the support area and then go up again. So let's continue. Bar 1. I had to write this a little small. I apologize. I'll read it to you. There was a lot to explain. Bar 1 is basically confirming the failure of bar A. Okay, this is what it says in the up thrust. Be cautious following up thrust if you see a down bar, which this is a down bar, meaning it closed lower than this one, with a narrow spread, which it's narrow, and if you weren't sure, if you clicked on it, it would tell you. And it's a narrow spread with volume lower than the previous two bars. And we know that because of the pink. Pink shows that it's lower than the previous two bars. Now notice the volume's lower here and the volume's lower here. Okay, this signal works best with strength in the background and a minor sign of weakness in an uptrend. Well, we have strength in the background because we have that period of accumulation, which we've confirmed. And we have a minor sign of weakness, yes. And we're in an uptrend, yes. So we've now confirmed one more sign of strength. You guys with me? Type yes if you understand what I mean. Despite the fact that we've seen these two signs of weakness, we've actually confirmed our sign of strength. Okay, great. Now here's, you have to keep reading, okay? And this is not intentionally to confuse you. The no supply bar fails because the next bar is down. Okay, does everyone see that? What that means is it's just not ready to go up yet. So we need to watch for lower volume and confirmation. Again, we're looking for lower volume and confirmation. But what this also is doing is negating any momentum that this weakness might have had. And if I was on the far right of the chart and I saw this and then the very next bar closed low, I'd say, okay, then I need to wait. Bar C is an up thrust. It's a false up thrust again. We have bar 1 to confirm the strength, which negates bar A. We have a serious strength, serious accumulation phase and a downtrend behind us. We have a serious signs of strength in the background as well. Notice too, it doesn't break the high of bar B. Okay, a real up thrust is actually into higher ground, and this really doesn't. This kind of stays, yes, it's higher than this one, but it barely breaks that, and it doesn't break that. So it's really not a good up thrust. It's again a false up thrust. And again, if you're a little confused, all you have to do is read the dialog box and it'll walk you through it. Okay, so those are the three reasons why bar C is also a false up thrust and really doesn't confirm any weakness. Knowing that you also have a serious accumulation phase behind you. And once you've drawn this, you kind of know that you're in the creek. It's kind of staying in that area, or jumping the creek, as they say, and you're basically waiting for it to kind of come down, which is where we're going to see it right here in these lower volume bars before it takes off again, okay? So bar D and now bar E, okay. The next bar should be down. Bar D is no demand. The next bar is down. Yep, next bar is down, so I put a check mark. That's correct. The problem is, though, that we're in an uptrend, not a downtrend. The no demand and works best in a downtrend. So that is not confirmed. What also is not confirmed is the fact that we have strength behind us. So that also makes us a weaker sign. Okay? Now when bar E comes along, we've now jumped the creek, gone back down into this area where the accumulation phase started. You shouldn't be surprised that the close is right there and the top is right there. This isn't magic. Bar E is a no demand. We're back into the creek. Look at the volume, much lower than any of its neighbors. The next bar is up, which means that it fails. The trending diamonds turn green, and the volume decreases again. Okay, so once again, we have lower volume here on bar E. The next bar is up, meaning that this fails. We've now started to turn green. We've gone from red to blue. We've gone back up over the creek on lower volume. And here is where you could go in if you wanted to wait. Again, here's the no demand, and again the next bar is up. So again this fails, and again it's lower volume, even lower than here, which means the supply has actually gone away. They've pretty much absorbed as much supply as they can, and they're ready to bring it back up again. Depending on your conservativeness or aggressiveness, you can go in any of these three areas. Okay, bar E ends up serving as a confirmation signal by its very failure. During the accumulation stage, again, the smart money is testing for supply in the market before bringing the price up again. Bar E is the final testing of supply in the market. Its failure turns the sign of weakness into a sign of strength. The next bar confirms the strength in the market. So by its very nature of failing, we've pretty much confirmed that we're in an uptrend. What do you look for at the start of any phase, whether it's an uptrend, an accumulation, or a distribution phase? We look for an ultra-high volume or a skyscraper. Then what we're looking for to show that the period has ended is we're looking for lower volume. And so what we've now done is we've seen lower volume, which by its very definition, a no demand has volume lower than the previous two. However, it's lower than anything else around it. The fact the next bar closes up and makes bar E fail turns that failure of no demand into a confirmation signal that prices are going to rise. What you've also noticed is that you're in a sideways moving market. It's a teeny bit hard to see with this horizontal line, but these are white diamonds right here. We've also moved into the blue. The medium-term trending is up. And you could even use the next bar after that to confirm again. Now watch again. The volume goes down lower. This no demand that gets triggered fails again. So in any of these areas, this is your confirmation signal. In any of these areas, you've basically essentially turned a weak signal into a strength. Okay? Either green arrow, or you could even say, wait for this, and this failure could enter again. Okay? It's essentially a no demand is that final testing. Because it failed, how about this? A no demand's reciprocal or exact opposite of itself is a no supply. So if you were to turn this around and you saw a no supply here, you'd have a no supply in a rising market or a test in a rising market, and it would have been confirmed. Instead, what I'm saying is that you have a sign of weakness that fails, oops, and is basically saying the same thing. Okay? So a sign of weakness, no demand. The no demand fails. You have to remember that the algorithm is triggered by its relation to the volume, to the spread, to the close, and to the bars around it. Okay? And this is the part that I'm saying, is that by its very nature of failing, it's basically turned itself into a confirming strength. Okay? What it's also telling you is that there's no more supply left in the market. They tried one more time, they brought it down again, and you can also tell by all this effort here to bring it down, this should also indicate here, this is a great, let's use this bar too. This is a great indicator. See how much volume is here? That's a lot of effort by the smart money to bring that price up, and it closes on the low. Then we end up moving into this area, and we have a no demand. Well, at first you'd say, okay, this is a no demand for higher prices, but by its very nature, when it fails, and now we've turned green and our medium-term trending is up, we basically have confirmed our strength. I know that sounds confusing, but that's what I'm saying, that you need to take the nuance and the subtlety, read the fact that it's failed as a confirmation. I'm going to show you the opposite as well, show you how failed tests equal a no demand in the downtrend. If I had to give you 4 signs to learn, it would be the no demand. Yeah, Kim, thank you. A double negative is a positive, exactly. So a no demand, a no supply, an upthrust, and a shakeout would be the 4 that I would say to study first. Juan asked me about 2 bars before that here. The only problem with that bar one is that normally tests like no supply, notice how this is a no supply. See how it has a little tail, it has a teeny bit. The problem with this bar is that it closes almost on the dead low. Tests don't typically close on the dead low, they close towards the middle. They always have a little bit of a tail on the bottom. I can't say for certain exactly with the algorithm why certain things don't trigger, but I can tell you that that's part of the reason why. However, when you see volume lower than the previous 2, and it's back down below this, it slices down through here, and then the next bar is up to confirm, yeah, you could call that basically an unmarked no demand, or no supply, I'm sorry. Jane, sure, so no supply, no demand, they're exact opposites of each other, an upthrust and a shakeout. Those are your reciprocals. And you will see them play off of each other all the time. They also play off of bad news and good news, and then the no demand and the no supply are indicators for entry and exit points for you. Both the no supply and the no demand are confirmation signals for you. And their failure, like we're showing you, is also a confirmation of the opposite. So, all right, this was the euro dollar today, the 15-minute. Just so you know, the reason why it looks a little different, this is our MT4 platform. This is our plugin for our MT4 platform. Just to give you a quick overview here. Again, the medium-term trending, you're in a downtrend, the bars are red. If you're in an uptrend, overall medium-term uptrend, you're in blue. It cuts down on the noise, so each up bar is blue and down bar is red. You eliminate all that. So your medium-term, you have blue as an uptrend, red as your downtrend. You also have your diamonds as your short-term trending up, your red diamonds as your short-term trending down, and this gray color is a sideways moving market, potential reversal moving market. You have your indicators as your signs of weakness and your signs of strength. You have your volume here, and you have this blue line which is showing your average volume, your histogram. Okay, so that's overall what you get. This turquoise and this blue are your volatility stops. We've talked about those before, but basically if you have blue and purple underneath, you're in an uptrend, blue and purple above, you're in a downtrend, and a split like this, you're in a convergence market or a possible sideways moving market. And in this case, you have gray and you have a split. So these are all ways to help you confirm what trend you're in. And again, you know, all webinars are recorded, and anytime you want the PowerPoint slides, just ask, no problem at all. So here we have in this phase right here, and this was the beginning of the market this morning, okay, we have a distribution or selling phase. It's marked by high volume, and when we click on both of these, we get supply coming in, showing that basically the smart money has stepped in to buy people who are willing to sell, okay? So the supply always represents the herd, what they're willing to do in a market. In this case, they're willing to sell in a rising market. And you can tell by the time of day that it continues. All right. We're also, three things have confirmed we're in an uptrend. We have blue bars, we have green diamonds, and we have the double volatility confirming we're in an uptrend. This whole thing is our distribution selling phase. Okay. What we have here is C and D, and what we end up having is basically failed tests which confirm the weakness. In other words, C and D together could be called no demand in a downtrend, and I'm going to show you that bit by bit. What I like to do is kind of, again, start with the whole, get down to the part, and go back to the whole again. So I'm telling you overall what we're looking at, and then we'll examine it little by little, and then we'll go back up again, okay? So bar A and bar B is supply coming in. That's the name of the indicator. And when you scroll down, you'll see the explanation in the dialog box. Okay, so at the start of the day is bar A. It's high volume. Oftentimes this happens, and I'm sure you've noticed this in any market. What that means is that the smart money is positioning themselves for the day. And so oftentimes they're going to mark things up or down on high volume in order to position themselves for the day, and if they can whip the market sideways any way they can, they will. So it's not always good to leap off on the first bar. It's also good to test the waters and kind of get a sense of what the day is going to be like, judging by the first bar, absolutely. But don't be surprised when you have high volume on the first of the day. Okay, so we have high volume at the first of the day, but it also continues, okay? We have very, very high volume through this area, and supply comes in. Okay. Now what we see here is basically we're still in an uptrend, but we start to see this try to go up and fail, try to go up and fail, and then it slices down. You start to get into the gray, potential sideways moving market. You also get the blue and the purple showing a convergence or sideways moving market. Okay. That's our short-term trending and our volatility stops. We watch our volume. Notice here, the volume is that peachy salmony color. Again, it represents volume lower than the previous two. And what you're trying to do is trying to show that bar C and bar D are signs of strength. So you think, that's kind of weird, right? We have signs of weakness. It's starting to go up. What you're always waiting for is a mushroom over, or when you know that the smart money is no longer interested in higher prices and has sold. In this case, what we've now watched is we've seen higher volume, and then as the price goes up, the volume wanes or decreases, and at the exact moment when it starts to go sideways and it starts to kind of chop a little bit, you end up with lower volume, meaning they're not interested in these higher prices, and these fail. Okay, so again, here's our beginning of our distribution phase. We have 3 ways we can tell. We have ultra high volume, widespread up bars, we're in an uptrend, we're in a green uptrend, and we have both our volatility stops showing we're in an uptrend. So 3 ways we can tell. Then we look for volume to decrease as the prices rise. Usually you look for a no demand in a downtrend and the volume to go away. What we're actually seeing is failed tests here, which equal no demand. Failed strength in this case confirms the weakness. Okay? So did we meet our objectives? Well, can you determine if an indicator is a success or a failure? How many of you feel comfortable determining when you read the dialog box if the next bar closes, if you confirmed it or failed it? Type yes if you think you feel pretty comfortable if you can determine if an indicator is a success or a failure. Okay, so a bunch of you are saying yes, which is great. Let me go back to this for 1 second. What you're looking for is ultra high volume to let you know that you're at the start. And then what you're looking for, especially in a distribution phase, is for it to mushroom over. And then usually to basically take out this area. Just like we were talking about before with our accumulation phase, we were waiting for it to blow through that creek or that area. Again, you're waiting for it to blow through downwards through this area. Usually it's on a no demand and a downtrend. But what we're looking for in this case, what we see is a failed test. And that essentially, this failed strength confirms our weakness. Okay? Yeah, break the ice, exactly. I always forget that other part of the Wyckoff, the creek and the ice, that's it. Thank you. So, most of you have said you can determine if the indicator is a success or failure. Now, here's the really big question. Can you elicit or take meaning from that failure? Meaning, can you interpret it? And now we've moved from the exact to the nuance, and this is a little bit harder. So, is the failed signal confirming the opposite? Type yes if you think you feel a little bit more comfortable interpreting that. Okay. Thanks for your honesty, Bill. I appreciate that. So here's the thing. Again, where most of this comes from is simply reading the dialog box, which sounds absolutely laughable, right? But truly, 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 if you read the dialog box, what it's saying is, here's the definition of the signal that you see. And then what you're also saying is that when you read it, it says if the volume is this, then it means this. If the volume is this, then it means that. The algorithm triggers certain if-then statements. That's how all algorithms are set up. But nothing takes the place of a human interpreting it, okay? And so some of you may not believe me that the sign of weakness failing confirms the strength, but in this case, when you have a failed test, it equals a no demand and a downtrend. It's the same thing. And you can tell right here with your eyes that you have this period of high prices. You have this ultra high volume, meaning the volume means that the smart money has stepped in. And then what you're really looking for overall, concept-wise, did we mushroom over, did the volume go away, and did we break the ice or slice through? That's essentially what the whole concept is. Gavin's book, The Complete VSA Sequences Explained, his 10 signs of weakness, 9 out of the 10 have no demand as a confirming signal, on the other end as a trade setup. What this is right here is essentially a no demand and a downtrend. Oftentimes you'll see an upthrust up here. Another thing for an upthrust would be a failed test. Those are some of the nuances that you start to get used to seeing. And I know it sounds sometimes a little counterintuitive, and always open for dialogue and discussion with this. I think that it can help increase comprehension for each other as well. So if you want a copy of the PowerPoint slides, please feel free to email me. This will also be on YouTube by tomorrow, and for those of you that are in our VSA club, we now have all the videos, or almost all the videos, and almost all the PowerPoint slides in a separate area under the ABCs of VSA. A lot of people had indicated, David, thank you, a lot of people had also said something about candlesticks. Personally, I'm not that comfortable with candlesticks. I'm not saying anything bad about them, I just don't know them very well. But I know that VSA is based on bar graphs. I think that's just the way Tom learned. It's just the way he had basically learned. So I know sometimes when people move from candlesticks to bars, it can sometimes be a little bit more difficult. So this is how you can tell. You should be able to determine if a signal has failed. In other words, when we saw the no demand, it says right in it the next bar should be up to confirm. If it doesn't, then it's failed. Ignore the overwhelming urge to see a red signal as sell and a green signal as buy. Again, remember our little desire to hurry up, hurry up, hurry up. We need to be a little bit more patient. Look at the overall story, picture, sense of the chart, and check multiple time frames to confirm. It's not always as clear. Okay? Go to my page, tradeguider.com/Lauren. If you're new, you can enter your email. You can download the first 4 chapters of Gavin's book. You can always call me direct. You can email me. You can Skype me. And then if anyone's interested in getting Gavin's second book called The Complete VSA Sequences Explained, you're absolutely welcome. You just go to this website. It's volumespreadanalysis.com/library. And I'm just going to leave this on for another second so you have a chance to write it down as well. And I want to thank all of you for the great discourse. Again, sometimes I can't always answer people's questions, but hopefully by the end of the presentation, many of your questions were answered. And as always, thank you for your interest and your participation. And I hope all of you have a wonderful, wonderful day.